Okay, Mentors listeners, welcome to another episode of The Mentors. We've got Matt LaHood, Clinton, our regular mentors on the show, and we've been doing some special stuff today. We've got another special guest just for you, a little bit of a treat. We thought we might mix it up a little bit because there's been all this noise in the marketplace of 2018 around, the credit crunch and, buyers finding it difficult to get finance and agents pulling their hair out because they thought the deal was across the line. It's not across the line. Valuations coming in like nowhere near they thought they would come. So we thought we'd bring a regular in-house guest, and from time to time, maybe he might join us. I think his name is Fane Levy. He's from Shore Financial in the northern Sydney, or around there, North Shore of Sydney. So Fane, welcome.
Thank you very much. Great to be a part of the Mentors, and thank you for having me today. Yes, I'm part of a group, Shore Financial in North Sydney. I'm one of the senior credit advisors there.
Yep, you've got a pretty big outfit there, right? Like how many's in your group?
Yeah,
there?
There's about 40 brokers there, plus support staff and whatnot. We've been around for 6 years now. We're an independent mortgage brokerage as such. Fastest growing firm actually as well.
Awesome.
Mortgage brokerage.
Yeah.
We've seen good volumes come through, writing close to over 200 million of new applications of new business every month.
Yep.
So we're seeing the volumes coming through, but very interesting times as we can all see what's going on in this marketplace.
I mean, Maddie, have your agents out there experienced a bit of turbulence in the marketplace with, finding buyers that can't get finance or deals falling over?
Definitely.
And,
it's not been smooth sailing along. I think a lot of the questions you need to ask as an agent is obviously working with a broker would be a smart thing to do, which is something I always strongly worked with a broker for my whole 30 years.
Yeah.
Or somebody in the banks, et cetera. The brokers obviously have got the nimbleness now to get out there, Fane, like you guys, and have a real go. But Clouds, I think if you're not qualifying before you're showing buyers through at the moment, you're wasting your time effectively.
Well, it's actually really funny you hit that point because, I was doing a workshop the other day with some agents and we said, talk to me about an A-grade buyer. Looks like A-grade, right? Everyone said financed approved, and then one guy said, I asked the question, are you pre-approved or formally approved? Because sometimes when you ask the question, finance approved, they think, I spoke to my broker and he said everything should be okay. Then came to the offer. The offer came, they're trying to put the exchange away, and then they go, oh, no, we've just put our application, we're just waiting on the banks, and then it's like 6 weeks later, the deal's fallen over. So, it's interesting, you mentioned about that, like some of the questions got to be asking.
Well, Fane, if you're talking to buyers as an agent, would you be recommending that they make sure before you do anything effectively, even put them in a car, meet them at inspection, that they can actually sign a contract today?
I would absolutely recommend that they get their approval first, because, gone are the days of, it's a walk in the park, you earn X, you spend Y, we know we can get it over the line.
So this might help the crew. How long does a pre-approval last? Is that a good question, I guess?
Yeah,
is
absolutely.
That relevant?
Yeah, totally.
Pre-approvals tend to last 3 to 6 months.
Okay.
If it is a longer approval, being 6 months, generally at the 3-month mark, they want to see updated pay slips and whatnot to make sure your financial position hasn't changed.
So if someone had pre-approval in September and they're looking at something in January, would you, as an agent, you were showing them through something and they got do you think they're still in the zone? Or
I would say talk to their broker again or bank, however it was done, just to make sure that it's all up to date, because with this marketplace changing, borrowing capacity has gone down. The banks can pull any strings that they like these days.
Right. So even pre-approval, you're still saying go back and just reconfirm again?
Absolutely.
Okay.
So
good advice.
Exactly. So would a question be, Fane, to ask, like say, as an agent to a buyer, saying, when did you get your pre-approval?
Yes.
I'd like to find out, because there could be someone says, we got it back in August.
Yeah.
And then all of a sudden that's like, it's not like almost like you got to go back again.
Definitely. That should be the first question you're asking is, are you pre-approved? If not, make sure you get pre-approved before you even start shopping the market.
Right.
Because what you could borrow 12 months ago, you cannot borrow today.
Okay.
What the questions that the banks are asking are just completely different to what they were asking a few months ago. The level of information that they're asking for before, it used to just be 2 pay slips, bank statement, maybe a credit card statement, and you're good to go.
Yep.
Now they want 2 to 3 pay slips. They want 3 months credit card statements, 3 months bank account statements, and 3 to 6 months of all your others. That's because they want to actually start going through your spending patterns,
Yes.
and they will determine what your living expenses are, not what you say they are. And that difference can make the difference of being able to borrow $1 million or $700,000. It's really having a flow-on effect and impact on borrowing capacity.
Really?
Yeah.
So, Fane, probably best thing to get best value out of yourself for the next sort of subsequent clouds would be, what would be if you're a buyer, or obviously we're talking to an audience of everybody, but agents are buying property themselves,
Totally.
and educating the vendors. What would be the top 3 things you'd need in order to have in order before applying for a home loan? Is that something you get asked a lot?
Absolutely. Yep. That's definitely
What would
important.
be the top 3 things? So one, you said obviously spending. Is there some way you'd recommend someone reduces some sort of, is there any type of spending that they're not happy about?
They definitely want to see that your spending patterns on over and above, the average as such. You can't exactly hide what you're spending. We can't say that to the banks, hide what you're spending. But if you're spending aggressively, you should probably dial that down, knowing that you're going to be purchasing a property for a good 3 to 6 months as such, not just 1 month. That's not going to cut it as such. Maybe reducing some of your credit card limits so you're not overly spending on them, because whether or not you have a balance or not on those credit cards, they're still going to apply that as a liability against you. If you're self-employed, like a real estate agent as such, make sure you have your tax returns in order. They're going to want to focus on 2 years tax returns. Some banks will just take the most recent year. However, they generally want to see 2 years of consistency at the moment.
Okay, what about, there's a lot of agents who are running a business within a business, right? So they're not like getting the traditional paychecks or whatever. So they're running like small business.
Yeah.
Anything that they need to have in order for themselves at all? Like, and is there other options than the traditional mainstream for some of these guys?
There definitely are. I guess being a mortgage broker and, having access to 30 different lenders, I know which bank to place with which agent or person or buyer as such and what they do as a career. Generally, some of the banks would look at annualizing your income. So obviously, if it's not as consistent, you may have a really good December and January, but then February and March may be somewhat quiet. So they'll annualize 3 to 6 months.
Okay.
So that's where we'd take someone like that whose income is somewhat cyclical as such.
Yes.
One other thing, just going back to your other point, something important is your actual conduct on your accounts. If you have late payments or failed payments or anything like that, if a bank just sees that once, they can automatically say, decline, we're not interested. We don't want to lend you money if you have a late payment on your credit card, because what are you going to do on your mortgage?
What would be late, like a month or 2 weeks or
anything?
2
Anything.
days?
If it just says late fee, even if it's a $5 penalty for a late fee.
That's good advice. Isn't it?
So keep all of your accounts in order. Make sure your direct debits are set up so that your phone bill's paid on time, your credit cards are paid on time, your home loan, if you have one, is paid on time, car loans.
So it's one of the
big things, Fane, I addressed our team about 3 months ago, and I saw the market sort of coming back in terms of people's incomes reducing in our business generally, around what turnover. The agents weren't clearing them as quickly because the days on market are blowing out. I suggested to them they do a complete relook at all their overheads as well. Just there's things that people pay that they don't actually, when you question them, they don't actually really need them. Like could be extra phone bills, could be an extra car they got for, just a luxury because they are making the extra money, Clouds. It could be all these things. To do a health check on your own financials, and then if you are going for a home loan, it'd be good, close a credit card, just have a debit card.
Yeah,
spot on, exactly.
Are they things you think are good?
Absolutely. If you were earning a certain level and it's now decreased because of the way the market is, surely your deductions and your expenses should come down too.
In line.
To be on a level playing field.
Because people like to hang out, and if they got 3 cars or something, they want to keep that third car, and they've got extra phones and I heard, and I don't know if this is fair income, you can tell us, I heard that the banks were really looking into things like Uber Eats and Netflix and Stan and all the extra stuff, Foxtel.
They're looking at everything these days. Absolutely.
So
I'm getting worried. I have 6 cups of coffee a day. Well, they look at that every day.
My credit card's been blowing smoke for burning smoke for about 20 years. I'd probably never get a home loan at the moment.
They're looking at everything, and that's why they're asking for 3 months. And they're going to say, oh, wow, you spent $150 this weekend, the next weekend and following weekend just on Uber Eats on a Sunday, whatever it was.
See, that's not unheard of, isn't it? It's the other thing is I got 2 kids and a dog, so I heard they're looking at pet food and school fees.
Everything they're looking
pet
at.
Insurance.
The only thing they're really not looking at is if you take a holiday or, if it's a one-off wedding gift or something like that. But if you're an active golfer, you can't just say it was a one-off, game of golf. If you're playing golf regularly with workmates or friends, they're going to start counting that.
So the question is, where's all this going to go? It's got to see sense and sensibility at some stage.
Because we've got the Royal Commission. When's that wrapping up?
Correct. So the main vehicle is this Royal Commission, which is due to wrap up in March.
So what will that mean once that's finished, the banks will sort of be a little bit less.
I think there'll be a bit of breathing room, hopefully, because the banks have obviously been on edge for 12 months now, so they're really worried about lending. At the end of the day, banks lend money to make money. Now that they've slowed down, surely their profit margins are decreasing.
If they don't loosen it, because I'm saying 90% of people would have some sort of discretionary spending that's probably, for lifestyle, feel good, like, you go out and you buy some new suits or something like that, which are random. It could be that's the stuff. People are shopping. Obviously, Christmas this time of year spikes up in a lot of people's expenses.
Definitely.
And there's things like I guess what happens if they start telling people that there's a knock-on effect around things like Uber Eats, Stan, those things just the consumption will go down if people start getting rid of those things.
Yeah.
So economically, from an economy point of view, if people are spending less into the marketplace because they're trying to read the play on what a home loan would be, that's a really negative effect, you would think.
Yeah, throughout the whole economy as such. Correct. Yeah, absolutely.
So what do you think on that, Clouds? Like, that's an issue, isn't it?
It is. And you know what? Over the last 3 to 4 years, agents have been making a lot of commissions, making a lot of sales. The market's been great. We've been in this rising sales market. And then all of a sudden we've had the brakes come in and, they're not making the sales and transactions. But, some agents have had this sort of lifestyle.
Yeah, so it's actually a good thing.
Which is, it's consumption, right?
Yeah.
Like, instead of having, one car, we've got 3 cars. Instead of having 1 holiday a year, we've got to have 3 holidays a year. And they've got to be 5-star. And all of a sudden, I think it's probably not a bad thing because it's time to consolidate. I think, with consumption, consolidation come across as well, and I think the better agents will certainly start to do that a lot more.
What are you guys doing, Fane? Like, so from you personally to write more loans, is it like real estate? You've just got to meet more people.
Absolutely,
because if you're talking to 50 people and only 25 can get a loan, versus you're talking to 25 and only 12 can get a loan, you just need more in your pipe, don't you? Really?
Absolutely. Meet more people, more clients, more referrers, and align myself with more people such as real estate agents, solicitors, etc. Exactly. We're exactly on par.
Yeah.
However, what we're seeing is due to this Royal Commission and the banks tightening, you're seeing a lot more declines come through. The last thing you want as a broker is to lodge an application and it's declined because the client has bad conduct or the client's overspending or what it is. So what we're actually seeing is now going and using some of the second and third tier lenders. So the major banks are still great, but when they say no, we need to find an alternative solution for our clients going to the Pepper, the Liberty, the Latrobes and some of those that maybe some of you guys haven't heard of. Yes, you're paying a premium. However, you're going to get that home loan over the line maybe in
there's
6 months'
opportunity
time.
for those other players to come into the market. See, Aussie Home Loans was created in this exact environment.
Yeah.
17% interest rates
You're absolutely
25 years ago.
Yeah, correct.
And Aussie came in and said, we'll come to your house to write your loan and we'll come out and that they created brokers, obviously, which is a derivative. Now, they were the first ones to you have to go to a bank to get a home loan years ago. Aussie said, we'll come to your house and we're cheaper.
Yeah.
So there could be a player like Mace, that could be something, maybe you guys are already onto it, going into the market and trying to, there's got to be a disruptor above the big 4 to take market share.
Absolutely.
Would that be right?
Yeah, absolutely. We have actually launched our own white label product branded by Shore Financial. So we're rolling that out and trying to test the waters on that where it's not as strict or regulated as such as some of the banks and we can still offer a really competitive rate.
So people are already thinking about it. But I remember Aussie came from nowhere. No one saw it coming. People said, Aussie Home Loans, what sort of brand? That's not going to do anything. And they never saw it coming, Clouds. And all of a sudden, how big did they become, Fane?
Absolutely.
They were the biggest broker in Australia on stage. Yeah,
absolutely. Yes.
Okay, yeah.
That's right.
Well, I think, for the ability for any business to do really well is to find white space, an area to play in where, like entering into 2019, finance is one of the hardest things to get the deal done. So I would imagine as a real estate agent, and maybe you guys could confirm this for me, a smart move would be to start partnering with brokers more.
Oh, 100%.
Right.
Yeah.
And I guess the flip side is the same for brokers doing the other side of it. So, come 2019, what do you think is going to be the most relevant thing to be able to do well when we're looking at the finance game, when we're looking at the real estate game? And that's the question for everybody.
I'll kick off. I think with the real estate game, you've got to have more strings to your bow than you've ever had as an agent. So, home loans is one of them. Conveyancing on tap is another one. A string of pest and builders behind you, builders, a stylist, and being, I think, regularly meeting with somebody like a Fane. If I was an agent day to day, I'd be regularly meeting with my broker to get the real sort of look and feel. Because we said before, have you heard the previous interview we were doing about in terms of like things are changing every month or every 2 months? Is that what you're seeing at the moment?
Absolutely.
Yeah.
We've got to adapt and change our ways to really, deal with this marketplace that we're in and how the banks are.
So, Clint, I think a strategy to your question would be, personally, if I'm an agent, I'm meeting my broker every week to get an update. Is that what you're probably doing that now?
To be at the forefront of the changes of what's happening, because you guys are seeing what's going on with the banks on a daily basis.
Absolutely,
and if I'm working with buyers, I'd want to know get an understanding of the trends or the patterns that are occurring at the time. So then I'm relevant and I know what to do to help a buyer, because sometimes buyers need education, and they may go to a broker or they may go to their traditional bank to get a loan. But if you're able to come from that real place of help and steer them and help them in terms of what's happening out there, then you could be one step ahead with that buyer to help them get that property, their dreams across the line. So I couldn't agree with you
totally.
more.
I totally agree. I'm working closely with a bunch of real estate agents and whatnot, and we do touch base on a weekly basis, whether it's actually daily or weekly, and it's just good for me to get an insight on what's happening from the agent side of view, but also from our side of view, because people are thinking they're going to get approved or they are approved, and it's taking a lot longer. And now bridging loans are becoming the new famous loans that we're writing these days, because people are struggling to sell, but then they need to bridge the gap from A to B. So, and like I said, using the smaller lenders is what's absolutely getting it over the line.
Yep.
At this point in time, guys who have banked with NAB or CBA for 10, 15 years and maybe worth millions and millions of dollars, the banks aren't looking at your net wealth. They want to know what you're bringing in now. And if you can't service what you're bringing in now, but you're worth 10 million, they don't care.
Yep.
And that's the thing, that's like kind of letting go of the past, something you said earlier. It's not about the past, that's how it used to be done. The banks are looking at serviceability. You may be worth a bar, but if you're not bringing in income right now, they're not going to be lending to you.
So, Fane, reach into your pocket, pull the crystal ball out. What's it look like in 12 months from now, your industry?
Yeah, I think it's still going to be very difficult. I think once this Royal Commission comes out, hopefully we'll see a little bit of breathing room, not much. I think they've now set the benchmark and this is the requirements they're going to want. Like you said, there's also going to be obviously another election, and if this negative gearing gets taken out, that is a huge scare and flow-on effect just for brokers, buyers, agents, the whole economy as such. It's very scary.
So you're saying around 12 months?
I would say 12 months till we see it maybe loosen a little bit, because someone's going to have to pull the trigger. And I don't, everybody's a little bit gun shy probably at the moment as to which bank is going to start loosening policy here or there. All they've done the last 12, 18 months is tighten.
What have you seen in the last month or two? So let's go back 2 or 3 months. If 10 people came to you to get a home loan approved, what would be the average percentage out of those 10 getting easy versus getting them actually through? Would it be 5 in 10, 7 in 10, 3 in 10?
I would say maybe 4 in 10 would be easy.
Right.
And the remainder of them would be a challenge.
Right.
And unfortunately, multiple lodgements. So we may say, this is a walk in the park, let's take it to NAB. NAB finds something wrong with it, declines it, or won't lend as much as we want.
Right.
Take it to another, smaller Bankwest, Citibank, one of them. Maybe get it over the line. If not, to one of the smaller guys, Pepper, Liberty, Latrobe.
Right.
And if you asked me this 6 or 12 months ago, I'd never done a deal with Liberty, Pepper or Latrobe. They've been on my panel for 3 or 4 years.
Well, they're going to
now
grow.
I've done 10 deals in the last few months.
Could look outside the box,
So
right?
the Peppers, Latrobes and Liberty, was it?
Yes, correct.
See, they're the new disruptors in your space. aren't they?
Absolutely, yeah.
And the disruptors in our space, we've got the likes of the Purple Bricks and the crew coming in, other brands doing.
Who are they? Never heard of them.
Other companies like that come in, and it just depends. The market sets itself around these competitors. So I'm assuming the big four are not going to sit there and let La Trobe and Pepper, because once they take market share, they're not going to get it back, correct?
The banks will have to, the majors will have to step in and start loosening to start lending again.
This is like, again, I say that about the Aussie sort of.
Totally.
Yeah.
Okay, one final question from me, Fane.
Yes.
Prediction. Interest rates to go up or go down in 2019?
I'm going to say go up.
Ooh.
Which they've been talking about for quite some time.
And
we haven't actually had the RBA
Why do you
lift.
think they're going to go up? I'm just curious.
They haven't actually lifted rates for 10 years, the RBA. If you know that, the RBA have left their rates on hold.
Yep.
As such.
10 years.
Yeah, for 10 years. So all the banks can act independently, and they have moved their rates. And just a few months ago, they moved them 15, 16, 17 basis points. But there has been talk that eventually they are going to start lifting their rates. I don't think it will be a huge lift. But again, this is crystal ball talking.
No,
hopefully I'm right.
But you're in the market.
I'm in the market. I don't foresee it going down, to be honest. I mean, they're at all-time lows as it is.
Yep.
I think the only way is up, but definitely small increments. We don't want to see what happened in the US or the GFC, where people can't afford, their home loans, which we're almost seeing at the moment, actually, where people are coming off their interest-only loans
this is a problem.
and they convert into principal and interest. They are unable to pay the principal and interest. So, they need to refinance to interest only, and some of the banks aren't allowing that. The banks are frowning upon interest-only loans for owner-occupied properties, or they're having to sell their properties. So we're already seeing some of this happening. So
have you seen any mortgage stress at all yet?
We have. We're hearing about it.
Yeah.
We're definitely seeing it. Touch wood, not so much from our own books, not to be biased, but quite a few referrals coming to us of mortgage stressed clients that need to refinance where their bank can't do it. We need to find them a suitable lender that can, extend
because
more.
That will, if there's more of that will probably indicate less likely a rise in interest rates, wouldn't it?
It would, which is true.
Yeah.
So that's why I say it's a tough one, because only the last, say, 5-6 months have we seen the stress come out from the bank lending and the mortgage stress coming into effect.
Cash is king at the moment, isn't it? If you've got cash and you've got your own property, you can really dictate to banks where you want to go, what you want to do with anything if you're not needing them for loans at the moment.
Correct.
Really. If you're drawing back off your own properties, what sort of is that being changed, a policy on that as well? If you've got full equity in it?
No, that hasn't changed just yet. So if you've got full equity on a property, you can redraw as you wish, as you come and go, which is a good thing. I wouldn't be surprised if they start clamping down on that, because some people may have $1 million equity and they can just go spend it on what they like.
Yeah. I was wondering if because that's sort of one of the last bastions of things that you don't have to go to a bank for anymore.
Yeah, it's getting scary. I mean, even credit card applications, we don't really deal with doing them, but a lot of clients who just want a regular credit card, they get put through the ringer just for a $5,000, $10,000, $15,000 credit card. So
it's amazing. Well, Fane, we've really enjoyed you stopping by here today at the Mentors for one of our other episodes. And mate, and joining us today, you've heard a couple of some great with Mark Morano.
Yeah, it's been fantastic
before, and we had Thomas before as well. So thanks so much for joining in. We might reach out to you during 2019 and see how things are going
to see if my predictions are correct or not,
and in the credit world. But thanks so much, and we'll catch you, listeners and viewers, on the next episode of The Mentors.
Thank you. Thanks, Fane.
Thank you very much, guys.
Got something great from this episode? It would mean the world to us if you passed it on. Tune in each week as we mentor a new agent. Have a question? Want to be on the show? Get in touch with Claudio Encina, Matt LaHood, or visit our Facebook page. The Mentors is brought to you by Sprinkler.media.